Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the SPY and data sets for May 22nd, 2025. And with that said, let's go ahead and jump straight into the video. I am releasing this kind of late. I apologize. I had some stuff come up earlier, so it's coming out about 3 hours later than what I would normally want to release it at. Now, let's talk about what happened with the data today. So, the market pretty much started to dump when the 20-year auction results came out. Okay. Um, what happened with that? So we had a massive spike in the yields, and that was largely due to the Moody's downgrade that, I discussed earlier in the week that happened, or that happened last Friday, but um, I covered in my Sunday video. And just the issues with liquidity with Japan's treasury market right now is causing um, treasury buyers to be absolutely terrified, and that's what the yield going up means is that we are having to pay a higher percentage on our debt to have people service that, and what that means is for people to buy our debt. So we are paying more for people to buy our long-term debt. That's a very bad thing. Granted, this wasn't a super huge auction, but it's a very concerning sign. You don't want the yields to pull back upward, and this is one of the highest prints on the 20-year bonds we've had, besides one print in late 2023. Uh, this is one of the highest prints, so very bad for the market. This could do a lot of damage, and we'll see over the next few major auctions. But yeah, we need to keep our eyes on the treasury market right now because this is really bad news. Now, let's go over what's going to happen tomorrow, and by tomorrow I mean on, Thursday the 22nd. We have the jobless claims coming in, and that, it's a weekly report. The forecast doesn't expect anything out of the ordinary. If we do get some sort of really cool number, so and by cool, this would mean that these would be elevated. So if this comes in hotter, uh, that would be bad for the market. Um, I'm not really anticipating anything like that though. Now, the big data set that everybody's really waiting for tomorrow is the PMI data, and that's at 9:45 a.m., and that's 15 minutes after market open. Uh, I don't really have any expectations about it, but what I do know is that producers have been needing to increase their prices, and based off of the CPI and PPI, we can sort of have some anticipation that um, while those reports have been cooler, a lot of producers like Walmart, people like that have been mentioning that they're going to have to raise prices. And we had President Trump mention that he wants Walmart to absorb these prices, and Walmart's saying that they can't. And our consumer base is really strapped. They're not willing to pay these prices. Well, what happens when it's Walmart? I mean that's a major sta stable for many families. So it's a big concern. We have a lot of issues going on with that right now. We have the home sales data coming out at 10 a.m. I'm not too concerned about that at all. That's really not going to move the market too much. We have the 10-year tips auction. Now, this is essentially a way to hedge the 10-year treasury. Um, this more than likely is going to go up in yield, but I really have no expectation about it. It shouldn't really move the market at all. It's not a super important auction, but it can be somewhat telling for, future 10-year auctions. Now at 12 or at 2 p.m., we have Fed member Williams speaking. Sometimes he says important stuff, sometimes he doesn't. I'm not too focus on what he has to say. If he has something super important, it'll come out through one of the bots or something that, we can track that. So other than that, the market's really going to be leaning on what's going on with the PMI. And again, based off of the CPI and PPI, those data sets were cooler, but companies have been needing to raise their prices. So that might show through this report. It may not. We will, we'll see tomorrow. On Friday, again, we don't really have anything major. Um, it's just again more home sales data, and that's basically it. It's just positioning stuff, nothing important. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And getting into the technical analysis, as always, let's go over the daily chart and pull up the moving averages and the Bollinger Bands. Alright, so the 5 MA currently is at 591.04. Let me open this up just a little more. The 5 MA is at 590. I'm losing my train of thought. The 5 MA is at 591.04, and the market closed at 582.86, which means that the 5 MA is going to start pulling downward. It's very likely we're going to see the 5 MA probably around the 586 range, 587, give or take, but just make sure you keep a note of it because that's going to be pretty important. And I'll discuss that in just a few minutes. Why? Now we are kind of trading within the 10 MA area. It's at 584.20. So remembering how we take the upper bounds and the lower bounds of a moving average, just be aware of that tomorrow. So, the upper bounds is that 586 range. The lower bounds is that 582 range. And I'll just cover that with the 5 MA. I said I would cover in a few minutes, but might as well just cover that. So if we get the 5 MA opening around, say, the 580-87 range, then that means the upper bounds of the 5 MA is at the 59 or 589, while the lower bounds is at the 585, which that can kind of line up with the 10 MA pretty well to where you can be testing both levels at the same time. This can lead to some chop, so just be aware of that. Don't just assume because we had some massive selling pressure that this is just going to absolutely start dumping. This can start, consolidating downward and chopping. Okay, so be aware of that. Now, the 20 MA is at the 570.39. Pretty key level, and that's because it's right below the 200 MA. And the 200 MA is at 572.57. So the range between the market being in full bull territory again, compared to still having our monthly support being in the bear territory, that's probably another 1 or 2 trading sessions away, depending on how far we drop or not. And what I mean by that is that the 20 MA is continuing to pull up to where the market's trading. If the market does not trade at where the 20 MA is at, then it is going to continue pulling up and pull above the 200 MA. Once it's above the 200 MA, that means that all of our short-term supports, and by short-term I mean like the 5 MA, 10 MA, and 20 MA, that's basically the weekly, bi-weekly, and monthly support, is all above the 200 MA range. That's a very bullish thing for the market, and that's, somewhat indicative that it wants to push upward, okay? If we continue selling off and if we pull the market price to this 200 MA range and then to this 20 MA range, then that means that we can actually pull all of our short-term support below this 200 MA range again and full on start dumping again. And I know that sounds unreasonable, but uh, This 20 mile is really, really important. If it does not break above this 200 mile range, with some real conviction, then uh, this can come toppling down very quickly. Okay. The 5 mile only takes 5 trading sessions to pull to the market price. So say we have some, absurd selling day and we get all the way into the 570s again tomorrow, then within 2 to 3 sessions, we'd be seeing that 5 mile pulling downward, coming within this range. And if we started pulling down below that, say we start heading down to the 550 range, then by day 4, day 5, we would see the 5 mile crossing underneath the 200 mile again. So as far away as that is, it's truly not that far, and that's something that pretty much everybody needs to be aware of right now, that this can get extremely bearish very, very, very quickly. Um, so don't ignore that. Now, we're not really near the upper Bollinger, but I am going to mention it. Since we are testing the 5 mile range, we tested the 5 mile. We rejected it today, okay? And because we rejected it, we went to the 10 mile. Now that we're actively trading in this range, that does mean that we can head back up, retest the 5 mile, and head back up to the upper Bollinger. Um, so if you're looking to hedge, like I know many profited on this downside already. Um, if you're looking to hedge potential upside, you can do so at this 10 mile. Just because I don't like hedging at the 10 mile doesn't mean that it's not a good level. This is still an extremely good level to hedge at because um, from the 10 mile you still have a whole $20 above you. Okay, and if the market's going to pull back upward, that means that the upper Bollinger is going to open up more, which means that that $20 range actually becomes closer to probably 25 to 27. Ha, losing my train. Can't talk. It'd be closer to 25 to $27 of upward movement. So having calls in this area is very, very good. Just make sure they're dated, okay? And same with our downside. Our downside right now is absolutely massive. Potentially we could be, going back to the 570, and if things want to get extremely, extremely bearish, then we look at the lower Bollinger, and that's our, at the 537 range, and yeah, plenty of room. So it's definitely a good time to hedge. Don't think that you missed out on all the action here. It hasn't even barely started. Now, I just want to quickly go over the hourly chart, and while I'm going to pull up the 4 hour chart, you can follow along on the hourly. It might be a little easier just because on my screen the hourly chart does not show very well. But what we should be looking at here, and I'm going to pull up the drawings and it's going to show a whole bunch of stuff and it's going to look terrible. I apologize. But it still shows the structure that I'm looking forward to. So we are going to work with that. Now, I talked about this potential head and shoulders here. Potentially we could be building a head on this large head and shoulders. We have potentially a left shoulder right here. And if we do start selling downward and, where's that range right now? That's right where the 20 mile is trading at. We can definitely consolidate downward, start trading within this range, test that out, and then complete this large inverse cup and start heading back downward. Um, that's the bear thesis right now, is that we're going to use this liquidity to continue forming structure downward and continue to break down and finish out this large inverse cup right here. And that inverse cup is actually a large handle. So just follow the purple on the screen, and for those who are colorblind, just follow the cursor right here. So it's this large purple inverse cup and handle. Okay. And with this blue channel right here, that's a major selling channel. We could potentially be rejecting the top of that. And I discussed this, I believe I discussed this in my video on Sunday. I hope I did. But we could potentially be rejecting this major selling channel top here, which That would fit this, exactly what we would expect out of the selling channel. And with the rejection of the top, that means that we'd be heading downward in this channel and, starting to form liquidity downward. Now, whether you're bullish or bearish here, I do believe we are going to start selling downward towards that 20 mo. Um, that's just my opinion on it. Now, the difference is, and I kind of discussed this the other day, I'm going to delete this cut because it's not in the right spot. It should be right there. Um, but the Bulls and the Bears are kind of wanting the same thing here, just a different outcome. The Bulls have ran this up very, very high. This is actually one of the fastest rallies in history. It's one of the fastest times that the VIX has been flattened, so the Bulls did a really good job. However, we do need to start retesting support. Okay, and as bullish as the market is, you still have to retest support. That's just a part of life. That happens in every rally. You can see this in any rally. It has to slow down and test support. Okay. Now, why I'm saying the Bulls and Bears want the same thing here is that we both want support tests. Okay. The difference is that the Bulls want a breakout and they want to extend this larger yellow buying channel. And by extending that, I mean it would, oh gosh, I don't want to do that right now. It would turn the channel to where it has this bottom line being at this support right here. So it would be a very, very large channel. It'd be covering most of my screen right now. Um, because the structure would be part of that. It'd be filling out this large cup and heading upward, to truly head into the five or the 660, 680 range, eventually. However, if we don't, fill out that channel, and this is where, the Bears want the difference, is that the Bears want to continue heading down within our major selling channel here and continue the structure out, and continue the sell off. And I do think we are going to continue the sell off a little bit just based off of, a lot of the structured selling we've been seeing. And what I mean by that is just, let me go over the hourly really quick. We've been seeing over the past, few weeks now how they like to really run it up early in the morning and then dump it. Here's a good example, run it up early, dump it. This is a good example right here. They run it up early and then dump it the rest of the day. Here's another example. They run it up and sell. Another example. They run it up and sell. This day, they just pretty much ran it up the entire day. This day, they ran it up early and sold off the entire session. This day, they ran it up and sold. So it's very controlled selling, and this is a continued pattern we've been seeing. And this is something we also see in our major correction. And you can see that here. They run it up, sell, run it up, sell, run it up, sell. And eventually that selling turns into something real. We started to see that a little bit today, but we do need more continuation. There's this massive gap here, and everyone's talking about it, so I'm just going to identify it. Yes, I see it. Yes, I do think we're going to go to it. That's a little bit below the 20 ma, and that would fit, right within the liquidity. So I do think we are going to go there. I'm not going to say that's going to be over the next like one or two sessions, but it could be. That's kind of my thesis, is that we will be seeing that area over the next, either this week or mid next week, very likely, if we don't, have some massive bounce here. So just structurally, what I'm looking for is continued bear structure. And it's just as simple as that. Continued bear structure. Looking for this inverse cup to fill out, looking for this large head and shoulders to fill out, and continue from there. We haven't been seeing good bull structure in here. We've just been seeing gaps being filled, but nothing really strong building yet. We do have this large cup, which, I've been talking about for a long time now. but now it's time to build a handle. And again, that's why we're going to need to come downward and test some support. So yeah, that's kind of the thesis for right now. I was asked to go over Soxel, but let's just look at Soxel. Let's go over the daily. So right now, I am currently short in Soxel, okay, because this is the bull semiconductor 3-time leverage ETF, okay. Um, why I'm shorting this is for multiple reasons, okay. If this is going to lead into another continuation to the correction, then I want to catch that. But secondly, if this is a cup, it, and it doesn't look like it, but if this is a bullish cup, then it still needs to build a handle. So we should expect selling regardless. And this is kind of what I was talking about on the SPY, is that we should expect this to pull down regardless. And that's to test support. That's to build more liquidity, and then we can continue to head up. Looking over SOX, which is the actual ETF for the semiconductors, it is rejecting off of the 200 MA. So that is kind of a telling sign so far. QQQ is above the 200 MA. Sorry, someone mentioned this earlier, so I'm just kind of looking at these with everybody. And let's check the RSP. The RSP is above the 200 MA as well. So another bullish thesis would be is that we are going to reject the 200 MA on the upside. So, for QQQ coming back down to this 492 and bouncing off. But then again, that's where the 20 MA is, and if we get that on like QQQ or SOX or anything, then we will also see that on the SPY because it's doing the exact same thing. Um, so yeah, that's the video tonight. Hope you all enjoy. Trade safe tomorrow. Don't get caught in any traps, and I will talk to you in the next one.